Today we will talk about banking liquidity crisis, and particularly we will take Credit Suisse as an example of general picture. First, let's speak about a little bit about the bonds and this situation in the treasury market. Some traders said that we have liquidity concerns right now in the treasuries and bonds, even though these instruments considered the safe haven of all asset classes. So whenever you have a problem, whenever you have a problem with deposits, whenever you have a problem with banks, you just buy treasuries for two years treasuries or 1 year treasuries. Let's start a little bit like what happened with the Silicone Valley Bank, where the whole liquidity crisis came on. So the Silicone Valley Bank been holding long treasuries for 30 years, for 10 years, and they've been holding good amounts. It's considered it's considered good assets, because if you hold them till maturity, you will get all your money. But mark to market, the situation was like they lost 30% of the of the money if they will sell right now. So actually, this kind of liquidity situation that happens with a lot of banks, a lot of funds, and that's why we have this kind of volatility in the bond market. Okay, it takes a longer time to make transaction. If we can add to this algo trading or algorithm trading and all that stuff, like you will have someone taking a bearish position on bonds, on treasury markets, and whenever they change this position and they need to cover, they need to close the shorts, they have problems. That's where liquidity problems come up out of nowhere, and it's never been like this. The Swiss reversal in expectations for Fed rate increases and bond yields led quant fund to their worst two-day stretch on record, falling like something like 7%. They've been it's something new. Recent closing of two major banks, let's go a little bit deeper on this, already challenging trades, and liquidity on the market of 10 years treasuries futures has been less than half the levels recorded before the Silicone Valley Bank collapse. So it means 50% of the liquidity just disappeared. For sure, federal government rescued the two banks, and they said we're gonna give back all the deposits as they were, not based on FDIC, not based what they supposed to give you back based on the law. On the law, it's only $250,000 per account, and they said we will give you back everything. Today you can transfer your money with press a button, and that's it. Push a button, and you transfer the money to the other institution. And this was the fear. That's why the Feds they so quickly closed everything, and they said we're gonna pay you and all the depositors. But it's not based on the law. It's based what they said right now. We might get the situation different. Like if we have 10 Silicon Valley banks at once, if we have 10, not 2, not 3, it will be a domino effect. Okay, and that's why they so quick reacted on this, and they promise everyone will get paid. Don't worry, we have a situation under control, but it's not under control. Okay, now you should ask if the bank is safe. It's not. And then if you ask this kind of question, it's better you to hold the treasuries, because at least the US government is not going to be bankrupted, not in the future 2 years. But if you have 2 years notes, it's quite safe. Let's go to a Credit Suisse. Credit Suisse, it was a big institution that actually like something like 166 years old, and it's the second biggest bank in Switzerland. And Credit Suisse is, they have a bad reputation for the last 10 years that I'm following the markets. There were a lot of issues with the Credit Suisse, like they've been holding ETN funds on VIX, and a lot of investors lost money there totally. And they were not happy, and several suits in New York running about this, like on several $7 billion lawsuits on these matters. And actually, like Credit Suisse was in several other things, like they got published with a financing to narco businesses or narco holders. They also had some Russian ties with the corruption money. They had some laundering issues. I'm not saying it out loud. This was like by major law houses, or it was made by it was in the newspapers. Okay, so they had some issues inside the bank with the management. Several high people switched the banks. We have some issues with this bank. And the share price is near $2. The share price dropped in Switzerland today, like something like 25%. It had a tremendous volume today in the US stock market, about like 450 million shares. The stock dropped like 15%. It was dropping like 25%, but in the end it closed near 15%. Okay, so now we have a Swiss regulator that telling us we will support the bank with all liquidity problems. And the problems with the Credit Suisse, they started in October, November 22. Because they had some funds that they lent the money, and the funds were buying the stocks, and then the stock drops, and they were supposed to give the money back, but whenever it dropped so hard and so quick that the Credit Suisse couldn't sell them on margin. Okay, so that's what we have. We have the bank riskiest bonds traded around 45 cents on the dollar for liquidity issues. And we have now, like it's a good time to maybe not to buy, I'm saying, but to follow this bank, because if they will be supported by Swiss regulation, and the Swiss government will give money, so maybe it's a good buy. But you need to, because it trades so low. I only want to ask several questions regarding this bank, and it will be the total conclusion. Last week, asset manager Harris Associates, it was the largest Credit Suisse shareholder, completely exited their position in the bank. It was near $3, like 30% more than it trades today. Okay. Credit Suisse now focusing on reviving wealth management and business and all that stuff, but actually they had like $100 billion outflows in the fourth quarter. Was this money moved out of Credit Suisse, and it's a huge problem. Now it's worth to look at this stock and worth to follow and to see how it develops. Okay, because if the Swiss government will support this company, and it's a huge company, if they will survive, maybe it's a good buy right now, because you're buying the share price based on option price. But you need to consider it's very risky right now. and that's it for today. If you like the video, please subscribe. And if you not agree with me and think, add your comments and share your opinions. Thank you, and please subscribe.